As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today, I get to introduce and discuss some of the rewards and the risks of investing in Covalon Technologies, designed for patients, made for care providers. This is an advanced vascular access and wound care technologies company. And this stock comes with a story, a good story, both in what they do and in their success for the past year. It's a boring company that helps people, which I really like on both fronts, right? We provide innovative and cost-effective healthcare solutions that help prevent infection, reduce pain, and promote healing. If you're investing in Covalon, you're not investing in some high-flying AI stock that's going to take over the world. You're investing in Valguard, IV Clear, CovaClear. You're mostly investing in boring things like these square wound dressing patches. So what I'm going to show you isn't financial advice. I'm not a financial advisor. I'm definitely not your financial advisor. But I'm going to try to tell you a narrative about Covalon and see if you agree. And the story really begins in what I'm looking for in a stock, which is revenue trending up, earnings trending up, cash trending up, ROIC trending up, valuation trending up. Is that Covalon Technologies? No, it hasn't been. Their revenue green bars here can be described as somewhere between lumpy, volatile, and maybe declining. And even when they do get increases in revenue in the past, their expenses have still been higher than revenue, meaning net income negative, net EBITDA negative. And when you look at their cash flow, there's been a lot of paying off debt and issuing shares to keep this company in operation. This isn't exactly what you want to see, and the company needed a change, which they got. So January 4th, 2024, this year, very start of this year, Covalon Technologies announced the appointment of Mr. Brent Ashton, the new CEO of the company. Mr. Ashton brings along 16 years of US-based global medtech leadership, including a lot of that at 3M Healthcare, now Solventum. He has been aware of Covalon for the past 10 years and has a strong domain experience in everything they do. How has that been working? Well, I feel like I'm giving away the story here by showing you this chart, because when Mr. Ashton took over, you could see the share price of Covalon was $1.22 Canadian. Right now, as I record, it's $3.10. So significant share price improvements. 8 months ago, they released their full year 2023 earnings from before Mr. Ashton took over, where they reported an 18-cent per share loss compared to 36 cents the year before. Basically, at that time, and not long after Mr. Ashton took over, there was announced that there was going to be management changes, rightfully so. By the second quarter of 2024, they announced profitable results. They are profitable. So after going from 18 cents per share loss here at the end of 2023, by Q2 of 2024, they are now a profitably operating company. And proving that it wasn't just luck, their third quarter was just as impressive. Strong third quarter fiscal results, 2024. Looking at Covalon now is one of the most impressive turnaround stories I've seen in a long time. This is the tale of two different companies showing top-line revenue growth here in the past 6 months, net income positivity in the past 6 months, and EBITDA, positive EBITDA as well. Everything else before, negative, 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 lumpy, negative, down, up, down, up, down, up. This is all a nightmare until you get to this, right? And coming back to this slide, we're just a short 6 months ago, this company did not meet any of the requirements that I have for a stock that I'm interested in. Into this, 2 quarters of solid growth and profitability. It's impressive. I can't say enough how impressive this is. And this is Covalon's Why Invest in Us page, talking about how they're solving customer challenges. They have strong underlying financial fundamentals. They have a lot of products in a lot of different segments for diversity and potential growth. And they have a favorable macroeconomic climate. And none of that was working out for them before until this. It's interesting that you could put a turnaround underway by experienced leadership as a reason to invest in us. And so far, working. So share price has gone up. I know for some people it's not quote unquote cheap like it used to be, but it's significantly de-risked with a couple quarters of improvement. The numbers suggest a pattern that I like, which is increasing revenue on the bottom line, decreasing expenses, and of course, better margins overall. And that allows us to take a real look at what Covalon is as a stock, because previously, when you're not making money as a company, it's very hard to value that as a microcap stock. a lot of negative numbers. You really can't use any of these valuations because they mean almost nothing. All you could look at is price to sales, what a company is valued at relative to their sales. Now, that has gone up. As per their past quarter, they have gone from 1.4 times sales to 2.3 times sales. However, we have numbers that we can actually look at here. The question about share price in Covalon really becomes about how much growth you think they can get in the future. How are you going to find that out? Well, shout out to Planet Microcap and Small Cap Discoveries. Planet Microcap has been covering this company for a long time, especially an interview here from a year ago. This one was just posted 6 days prior to this recording from me, so they have a lot of coverage. If you want to learn more about Covalon Technologies, go check out Planet Microcap on YouTube. So this is their third quarter of 2024. Revenue is up 47% year over year. This is only 9 months after Mr. Ashton took over. As you can see, expenses are down. Revenue up and expenses down make for happy shareholders, because that, of course, leads to a significant net income increase. They went from negative 1.5 million last year in their first 9 months to over 2 million of net income this year. Even quarter over quarter, losing 500,000 last year, 1.4 million in this most recent quarter. That's really good. And shareholders can still say those are rookie numbers. I mean, in all fairness to the CEO, creating pretty high expectations when you've been around for about 10 months and the turnaround has worked out this well. You see the significant trajectory, net income going from a significant 2022 net loss of over $9 million to being $2 million in the green. I mean, that's a slow clap moment. Good work. Keep it up, right? So yes, this is a story stock because I feel like you need to hear the story, understand what's been going on that has moved this company from so far off my watch list that I'm not even paying attention to something that's moving up my list quickly and probably going on to my top stocks. This is a story about a change in management, about a successful turnaround, and about how their financial fundamentals are improving. Again, they have a 21-page investor deck that you could go look at. I will put that down below in the pinned comments. So go take a look. Let me know what you think of Covalon. I have a paid Patreon, which leads to a Discord where we research and discuss all the stocks that I cover on my channel and the ones that I might cover in the future. It is now allowing me to offer an annual membership for a 10% discount, so I think it's pretty cheap for what you get. And coming soon in December, I'm going to start making some videos showing you how I find and research microcap stocks. You've been listening to Common Sense Investing. My name is Cameron. As always, thank you for your time. I hope to see you again soon.